Let's be honest, seeing that brown envelope with the HMRC logo drop through your letterbox, well, it's a moment that can stop your heart. But what if you had a clear, simple roadmap to get through it? That's exactly what we've put together, working closely with the experts at My Tax Accountant. In this guide, we are going to walk you through absolutely everything you need to know, step by step.
And that quote really hits the nail on the head, doesn't it? It's a feeling almost every business owner dreads. Your mind immediately starts racing, thinking the worst. But believe me, how you react in those first few hours and days is what really counts. This guide is all about swapping that panic for a solid plan.
You see this logo, and it feels incredibly personal, right? Like you've been singled out from everyone else. But that is so rarely the case. For HMRC, it's often just a standard procedure. So the very first thing to do is just take a deep breath. We're going to take you from that initial shock right through to a feeling of being back in control.
Okay, so here's our game plan. We'll start with the moment that letter arrives. Then we'll dig into why you might have been chosen. After that, we'll cover your action plan, your rights as a taxpayer, and finally, what the possible outcomes and next steps look like.
Right then, first things first, let's tackle that immediate wave of anxiety head-on with a bit of knowledge. Just understanding what a compliance check actually is, and more importantly, what it isn't, is the best way to make this whole thing a lot less scary.
So, in simple terms, a compliance check, or what HMRC sometimes calls an inquiry, is really just a review. They're taking a look at your records, your tax returns, and your documents to make sure everything lines up and that you've paid the right amount of tax. It's a totally normal, fundamental part of how the UK tax system works.
Now this is so important to remember. Getting a check does not mean you're being accused of anything. Not at all. An expert at My Tax Accountant was just telling me about a client whose records were absolutely perfect. The check was opened and closed in just 3 weeks with 0 issues found. Sometimes it really is just a routine spot check.
Which, of course, brings us to the big question that's probably buzzing around in your head. Out of all the millions of tax returns filed in the UK, why on earth was yours picked? Getting your head around the why is the next key step to demystifying this whole thing.
It can really feel personal, can't it? But the truth is, the selection process is almost always driven by data, strategy, and risk assessment. It's not some personal vendetta, so let's have a look at the main reasons a letter might land on your doormat.
There's actually a mix of reasons you might be selected. Sure, it can be completely random. They do that to keep everyone on their toes. But more often than not, it's HMRC's incredibly sophisticated software called Connect that flags something up. It could be a simple data mismatch, like you forgot to declare some bank interest. Or it could be a sudden big change in your finances, like your income suddenly jumping by more than 20%. And if you're in a cash-heavy industry like a restaurant or a taxi service, you're naturally going to face a bit more scrutiny.
To really get the bigger picture, you have to look at this number. Almost £40 billion. That's the UK's tax gap. It's the difference between the tax that HMRC thinks should be collected and what they actually do collect. Closing this gap is one of their biggest priorities, and these compliance checks are their #1 tool for doing it. So you see, it's not really about you personally, it's about this massive number.
And here's a quick pro tip for you. The single most common error that trips up small business owners and freelancers is blurring the lines between personal and business spending. Putting the weekly food shop on the business card or paying for a personal holiday from the company account. It's such an easy mistake to make, but for HMRC, it's a huge red flag. And the potential consequences? Well, they can be really severe. This quote from a London restaurant owner is a pretty stark reminder of what can happen when records aren't kept properly, especially in a cash business. All HMRC did was compare their supplier invoices to their declared revenue, and the numbers just didn't add up. The result? A painful £18,000 fine and a bill for 3 years of backdated tax. Ouch.
Okay, so you now know what a check is and why it might happen. Now for the most important part, what you actually need to do next. This is where you stop reacting and start taking back control of the situation.
Your first moves need to be calm and methodical. First, read that letter. Then read it again. Pinpoint exactly which tax year they're looking at and what information they want. Second, start gathering your documents straight away. Procrastination is not your friend here. Third, and this is absolutely vital, contact your accountant. And finally, think about how you'll communicate. Stay calm, be polite, and only answer the specific questions they ask.
Now here's the kind of documentation you absolutely must have organized, and pay close attention to those retention periods.
For a sole trader, you need to keep records for at least 5 years after the 31st of January submission deadline for that tax year. For limited companies, it's 6 years. Just having your purchase invoices, sales invoices, and bank statements ready to go will make this entire process so much smoother.
Another pro tip. A lot of people worry about the cost of getting professional help, but honestly, in the middle of an HMRC check, an accountant is not an expense, they are an investment. They know the procedures inside out, they can spot potential problems you'd never see, and they act as a professional buffer between you and the inspector. That peace of mind alone is worth its weight in gold.
All right, so you know what you need to do, but it's just as important to know what you are entitled to. Understanding your rights is so crucial because it helps to level the playing field. Stay with me here. This part is where you can really start to feel more confident about the whole process.
These are your fundamental, non-negotiable rights. You absolutely have the right to have an accountant or a tax advisor act on your behalf. You have the right to take a reasonable amount of time to consult with them. Your dealings with HMRC are confidential, and crucially, you always have the right to appeal any decision you don't agree with. All of this is backed up by something called the HMRC Charter, which legally requires them to treat you with fairness and respect.
Now, this is a really critical distinction to understand. HMRC might ask for a very wide range of documents, sometimes even for years that aren't officially under inquiry. But what they can legally compel you to provide is only the information that is reasonably required to check your tax position for the specific year in their letter. They can't just go on a fishing expedition through your entire financial history. An experienced accountant will spot an overly broad request a mile off and can push back for you.
If informal requests for information aren't getting anywhere, HMRC can up the ante by issuing a Schedule 36 notice. This is a formal, legal demand for information, and it is absolutely not something you can ignore. It will have a strict deadline, and if you don't comply, you're looking at initial penalties of £300 that can climb very quickly. This is where the process gets really serious.
Okay, we're getting towards the end of the process now. You've gathered your information, you've communicated with HMRC, so what happens next? Let's look at the potential outcomes, how any penalties might be decided, and what your options are if you disagree with their conclusions.
Penalties aren't just plucked out of thin air. They're calculated based on a few key things. The penalty is always a percentage of the potential lost revenue, which is just the fancy term for the tax that was underpaid. That percentage then depends on your behavior, so whether a mistake was just careless or if it was deliberate. But here's where you get some control back: the quality of your disclosure. By telling them what's happened, helping them get the right information, and giving it freely, you can significantly reduce the final penalty.
And what if you get the final decision letter and you just don't agree with it? Well, you don't have to just accept it. You typically have 30 days to appeal. The first step is usually to ask for an internal review, where a different officer at HMRC takes a fresh look. If you're still not happy after that, you can take your case to the Independent Tax Tribunal for a formal hearing. Look, to really see just how valuable professional help is, just look at this comparison. Trying to handle a check alone usually means very high stress, a massive time commitment, and a much bigger risk of making a mistake that leads to higher fines. But with an expert from My Tax Accountant on your side, they manage the stress, they do the heavy lifting with the documents, and they act as your professional mediator with HMRC. The difference is night and day.
Just before we finish up, a quick but important note. The information we've shared here is for general guidance only and shouldn't be exclusively relied upon for your financial decisions. Everyone's tax situation is unique and can be complex. So, before making any decisions, you must consult the tax experts at My Tax Accountant.
So, the key takeaway from all of this is pretty simple. An HMRC compliance check is a serious process, but it is absolutely manageable with the right knowledge, preparation, and professional support. For expert help with this or any other tax issues you might have, please don't hesitate to contact the team at My Tax Accountant. Their details are right there for you. Thanks so much for watching, and be sure to subscribe to their YouTube channel for more clear expert guides just like this one.